Ever wish you could peek behind the curtain of those massive warehouses?
Yeah.
The ones powering all our online shopping sprees?
Yeah.
Today we're doing just that.
Really getting in there.
We're diving deep into Symbotic Inc.,
Okay.
a company using AI-powered robots to reinvent how these warehouses operate.
Interesting.
But is this a hidden gem in the stock market or a potential trap?
Yeah.
By the end of this deep dive,
Okay.
you'll have all the insights to decide.
That's good.
And stick around.
All right.
Because later I'll reveal a surprising twist about Symbotic's future plans.
Oh.
Could either make them a game changer or a cautionary tale.
Wow.
Now,
Yeah.
if you love exploring the future of business and tech, hit that subscribe button.
All right.
So you don't miss any of our future deep dives.
Okay.
We've got a stack of research reports and articles all about Symbotic Inc., SYM.
Interesting.
Our mission is to help you figure out if this company's worth investing in.
What's fascinating about Symbotic is they're not just providing pieces of the puzzle. They're offering a complete solution for warehouse automation.
So instead of just selling robots, they're designing, building, and even operating entire automated warehouses.
Exactly.
That's a pretty comprehensive approach.
And their secret weapon is their AI-enabled software. It's like having a super smart conductor coordinating an entire orchestra of robots,
Okay.
optimizing everything for speed, efficiency, and flexibility.
I'm already picturing a robot ballet.
Yeah.
But how does this translate into revenue for Symbotic?
They have a multi-pronged approach.
Yeah.
They make money through system installations, software subscriptions, and ongoing support services.
And is there a market for this? Are companies actually looking for these kinds of solutions?
Oh, absolutely.
Yeah.
The warehouse automation market is booming.
Okay.
It's projected to grow at a rate of 15.9 to 18.7% annually through 2030.
Wow, that's a significant jump. What's driving that kind of growth?
It's a perfect storm of factors.
Okay.
We have the continued explosion of e-commerce,
Right.
which demands faster and more efficient order fulfillment. Then there are ongoing labor shortages, making it harder for companies to find workers for physically demanding warehouse jobs.
Right.
And finally, supply chains are becoming increasingly complex, requiring sophisticated solutions to manage inventory and logistics.
It sounds like Symbotic is well positioned to capitalize on these trends.
Yeah.
But they're not the only player in this game, right?
Right.
What about the competition?
The competition is definitely heating up. You've got established players like Dematic de Fuku and Swisslog, all vying for a piece of this lucrative market.
So what sets Symbotic apart in this crowded space? What's their edge?
Their advantage lies in their fully integrated system and their unique high-density storage structure.
Interesting.
It's not just about doing things faster. It's about maximizing space and efficiency.
Right. Their system allows them to store more products in the same footprint, which is a huge advantage for warehouses facing space constraints.
That makes sense.
Yeah.
But I'm also seeing some potential headwinds.
Yeah.
What about these new regulations on emissions and energy efficiency? Could those impact Symbotic's bottom line?
That's a valid concern.
Okay.
These regulations could increase their operational costs, especially for energy consumption.
Right.
It means they'll need to continue innovating to stay ahead of these requirements and maintain their competitive edge.
Okay, so we have a good understanding of Symbotic's business model and the industry landscape.
Yeah.
But what about the people behind the scenes? Let's shift our focus to management.
At the helm is CEO Rick Cohen,
Okay.
a seasoned veteran in the warehouse automation industry.
That experience must be a huge asset, especially in a fast-evolving field like this.
Absolutely.
Yeah.
His expertise, along with the team's deep knowledge of robotics and AI,
has played a key role in the company's success.
But you mentioned earlier that Symbotic is facing some accounting scrutiny.
Yeah.
What's the story there?
Well,
Could this raise concerns about management's credibility?
it's definitely something to keep in mind.
Okay.
While Symbotic has addressed previous accounting concerns and emphasizes transparent communication, there have been reports of revenue recognition errors. And we can't ignore the fact that insider selling has been exceeding insider buying.
You're right that insider selling activity definitely raises a red flag. It suggests that some people within the company might not be as confident about its future prospects.
Yeah.
So where is Symbotic allocating its resources? What are their priorities?
Their focus seems to be on reinvesting capital back into the business,
Okay.
particularly in research and development and strategic acquisitions.
That sounds like a typical growth phase strategy.
It is.
Are there any acquisitions that stand out?
One significant move was their acquisition of Walmart's advanced systems and robotics business
Okay.
for a substantial $200 million.
Wow, that's a major investment. It seems like they're betting big on solidifying their relationship with Walmart,
Yeah.
their biggest customer.
Right.
But was it just about the relationship? Or were there specific technologies they were after?
It seems to be a combination of both.
Okay.
Walmart's robotics technology could give Symbotic a competitive edge, and strengthening their ties with such a giant retailer is a strategic win.
Now let's dive into the company's financial health.
Okay.
And see what the numbers tell us.
Their revenue growth is impressive,
Yeah.
reaching $1.2 billion in fiscal 2022,
Okay.
with expectations of reaching $2.1 billion in 2023.
All right.
However, they are currently unprofitable.
The classic growth phase dilemma.
Yeah.
Spending money to make money.
Right.
But is their spending sustainable?
Right.
What does their debt situation look like?
They have a low debt-to-equity ratio, which is a positive sign. It indicates they're not overly reliant on borrowed money. In fact, they're currently debt-free,
Good.
which points to strong financial management.
That's always reassuring to hear.
Yeah,
But you mentioned earlier that they're not profitable.
right.
What's the story behind that?
Well,
Are they burning through cash too quickly?
that's a key question.
Yeah.
While their lack of debt is a positive,
Right.
they do have negative free cash flow.
Uh-oh.
This means they're not yet generating enough cash from their operations to cover their investments and expenses.
So that's something to keep a close eye on.
Mm-hmm.
Are they offering any dividends to investors at this point?
Not at this time.
Okay.
They seem to be prioritizing reinvesting those potential profits back into fueling their growth.
Okay.
Yeah. So, yeah, that's right. Their focus is on expansion and solidifying their market position. Now, before we move on, I want to remind you that we have links to all the research reports and articles we've used for this deep dive in the episode description. We encourage you to check them out and do your own research.
Yes, definitely take a look. And while you're down there, let us know what stocks you're interested in. We're always looking for new companies to explore, so drop your suggestions in the comments below.
We love hearing from you. All right, let's shift gears and talk about how the market is perceiving Symbotic. What's the overall sentiment from analysts?
Are they bullish, bearish, or somewhere in between?
Well, the general sentiment is cautiously optimistic. Many analysts recognize Symbotic's potential to disrupt the warehouse automation market.
And what about price targets? Are they predicting a surge in Symbotic's stock price?
The price targets range from a low of $10 to a high of $60,
Wow.
with an average target of 36.33.
So there's quite a spread of opinions, but the average does suggest a potential upside.
That's right. But it's important to remember that these are just projections, and the stock market is notoriously unpredictable.
Absolutely. We can't rely on price targets alone. What are some of the factors that could influence Symbotic's stock performance, both positively and negatively?
One concern is those accounting issues we discussed earlier. The news of delayed filings and revenue recognition errors has raised some eyebrows among investors.
It definitely casts a shadow of doubt over the reliability of their financial reporting. What about short interest? Are there investors betting against Symbotic?
Yes, and the short interest is quite high at 39.18% of the float. This means a significant number of investors believe the stock price will go down.
That's a pretty substantial bet against the company. It seems some investors aren't convinced by Symbotic's growth story. What about the investors who are on board? Who are the major players holding Symbotic stock?
When we look at the ownership structure, we see a mix of institutional investors and insiders. Major players like SoftBank and Bailey Gifford hold significant stakes, indicating confidence from experienced investment firms.
That's a good sign. Having reputable institutional investors on board can lend credibility to a company. And what about the insiders? Are they holding onto their shares?
Yes, insiders also have a significant ownership stake, which suggests they believe in the company's long-term prospects.
It's encouraging to see that both institutional investors and those with inside knowledge are putting their money where your mouth is. Now let's wrap up with a comprehensive risk assessment. We've touched on a few risks already, but what are the key threats and opportunities facing Symbotic?
Their heavy reliance on Walmart is a major consideration. Any negative change in that relationship could have a significant impact on their business.
Right, Walmart is essentially their anchor customer. It makes them vulnerable if anything disrupts that partnership.
Exactly. And then there's the lengthy system implementation timeframe, which averages around 2 years. This could hinder their ability to scale rapidly and capitalize on the growing market demand.
In the fast-paced tech world, 2 years can feel like an eternity. Competitors with faster implementation times could gain an advantage.
Absolutely. And those accounting errors and internal control weaknesses we discussed are another red flag. Investors will be watching closely to see if Symbotic can address these issues and regain trust.
Trust is crucial, especially in the financial markets. Any perceived lack of transparency can erode investor confidence. What about the competitive landscape? How does Symbotic stack up against its rivals?
The warehouse automation market is becoming increasingly competitive, with new players emerging and existing ones stepping up their game. Symbotic will need to continue innovating and differentiating itself to maintain its market leadership.
So they can't afford to rest on their laurels. They need to stay ahead of the curve and keep pushing the boundaries of what's possible in warehouse automation.
Precisely. And they need to demonstrate that their technology can deliver tangible results, increased efficiency, reduced costs, and improved order fulfillment.
So with all these factors in mind, let's get to the big question. Is Symbotic a buy?
Well, as with any investment, it depends on your individual risk tolerance and investment goals. Symbotic presents a compelling case with its innovative technology, strong market position, and ambitious plans. But it's also a company with its share of risks. Heavy reliance on a single customer, lengthy implementation times, accounting concerns, and fierce competition.
It sounds like a classic high-risk, high-reward scenario. Investors who are willing to ride out the potential volatility and believe in Symbotic's long-term vision might find this an attractive opportunity. But those with a lower risk appetite might want to wait and see how the company addresses its challenges and executes its growth strategy.
Exactly. It's a situation where careful consideration and due diligence are paramount. Now, remember that surprising twist I mentioned earlier?
Oh yes, it can't leave us hanging. What's the scoop?
Symbotic isn't just focusing on those massive automated warehouses. They're also developing what they call micro-fulfillment centers.
Micro-fulfillment centers.
Okay?
I'm intrigued. What are those?
Yeah. Imagine these as compact, robot-powered warehouses strategically located within urban areas, much closer to customers than those massive fulfillment centers we typically associate with online retailers.
So like mini Symbotic systems, designed for rapid localized delivery.
Precisely. It's a bold move aimed at revolutionizing same-day delivery and potentially disrupting the last-mile logistics landscape.
It's an exciting concept, but also a risky one. It's a whole new ballgame with different challenges and considerations compared to their core business.
Absolutely. It remains to be seen whether this will be a stroke of genius that propels Symbotic to new heights or a costly distraction that stretches their resources too thin.
It's a high-stakes game for Symbotic. They're juggling innovation, execution, financial management, and market perception all at once. This deep dive has really given us a front-row seat to the complexities of building a successful business in today's tech-driven world.
It has. And it underscores the importance of informed decision-making for investors. We've laid out all the cards on the table, the potential, the risks, the challenges, and the bold bets Symbotic is making.
Exactly. Now it's up to each individual investor to weigh those factors and decide if Symbotic aligns with their investment philosophy and risk tolerance.
And if you're looking for more deep dives into fascinating companies like Symbotic, make sure you hit that subscribe button. We're constantly exploring the cutting edge of business and technology, uncovering insights that will empower you to make informed decisions.
And remember, this deep dive is for informational purposes only and not financial advice. Always do your own thorough research before making any investment decisions. Until next time, happy investing.